Hi student, now we are at our 16th chapters on pricing and revenue management in supply chain. So let us look into the learning objective for this chapter. So student able to understand the role of revenue management in supply chain. You also able to identify conditions under which revenue management tactics can be effective. And last, we are able to describe trade-offs that must be considered when making revenue management decisions. The role of pricing and revenue management in supply chain. Revenue management is the use of pricing to increase the profit generated from a limited supply of supply chain asset. Supply asset exist in two forms. One is capacity and another one is inventory. Revenue management may also be defined as the use of differential pricing based on customer segment, time of use, and product or capacity availability to increase supply chain profit. Revenue management has a significant impact on supply chain profitability when one or more of the following four conditions exist. The value of the product varies in different market segments. The product is highly perishable or product wastage occurs. Demand as seasonal and other peaks, and the product is sold both in bulk and on the spot market. Pricing and revenue management for multiple customer segment. Under this section, so normally we will impose on differential pricing. So why? We believe that differential pricing will increases total profit for the firm. So there will be a two fundamental issue must be handled or given attention when you want to practice multiple customer segment. So one is how can the firm differentiate between the two segments and structure its pricing to make one segment pay more than other segment. How can the firm control demand such that the lower paying segment does not utilize the entire availability of the asset? So these are the two fundamental issues that you need to take into account when you're applying pricing for multiple customer segments. So this graph, a simple example of demand curve. I assume that student know how to read this curve. Okay, this is the demand curve. Okay, at the demand 5,000. Okay, and the price of the product is 2 ringgit 50 cent. Okay, very simple. Okay, this is a linear graph. Okay, so with the function d is equal to 10,000 minus 2,000 p. Okay, so this is where when demand is, for example, when demand is 3,000, so the price for that same product is 3 ringgit 50 cent. When the demand is 6,000, you can see the price for the product is 2 ringgit. Okay, so when the demand is 10,000, the price of the product is 0. And when the price is 5 ringgit, there is no demand for the product. Okay, so this is how you read a demand curve. Okay, so you can see when the demand is high, the price of the goods is lower compared to when the demand is low. Okay, so of course we have certain formula to price the multiple segment. Okay, so using the formulas, customer unwilling to commit D1, customer willing to commit D2. Okay, so C is 10 ringgit, yeah. So you apply, you plug in all the figures, then you get price 1 and price 2, how much it costs. Okay, price 1 is 130 uh, ringgit, and whereas price 2 is 67 ringgit 50 cent. Okay, so then you can calculate putting the price, element of price into each functions. Then you derive the demand value, uh, the demanded quantity value. Okay, for D1 is will be 2400 and D2 will be 2300. Then from there you will get the total profit, which is 420,250. So same price to both segment. If we put same price to both segment, so we will end up getting total profit of 368,166. Okay, so you can see when the price is different, you look at the total profit is higher compared to when the price is same. So that is the reason why supplier or manufacturer preferable to place a differential pricing for different segment. And this segment normally will look into the buying power of the consumer. Are they willing to pay if I place this much of the price for that particular product? Okay, so a lot of element you need to take into account as well, not simply put the price. So the total production capacity is limited to 400 unit. Okay, so again, using the help of Excel, in the book that you all have is clearly stated, the step all is clearly stated. Just follow thoroughly and carefully to get the value, profit value. Yeah, you see, okay, it's all but you make sure the formula that you key in is exactly stated here, okay, to get this value. So with Excel it's easier for us to derive the total profit. So on the part of allocating capacity to a segment under uncertainty, okay, of course there will be a trade-off between committing to an order from a lower price buyer or waiting for higher price buyer to arrive. So one is on, we will talk on spoilage and spill. Okay, so on allocating capacity to a segment under uncertainties, effective use of revenue management increases firm profit and improves service for the more valuable customer segment. It's also create a different version of product targeted at different segment. Tactic for multiple customer segment is normally price based on the value assigned by each segment. Sometimes we use different prices for each segment. Not sometimes, most of the time, use different prices for each segment. Focus at the segment level. Look at the forecasting. So again, we need information in terms of data. Allocating capacity to multiple segment. Okay, you see revenue from segment A, revenue segment B, so with the different price. Okay, so mean demand of segment A is DA 3000 cubic feet. Standard deviation of demand for A, the sigma value is here 1000 cubic feet. Okay, you will just plug in all the needed information into the given formula. Okay, So you can see we have capacity A 2820 cubic feet, and we have 3253 cubic feet, okay, with different price value. Okay, key point: if a supplier serves multiple customer segments with a fixed asset, it can improve revenues by setting different prices for each segment. Prices must be set with barriers such that the segment willing to pay more is not able to pay the lower price. The amount of the asset reserved for the higher price segment is such that the expected marginal revenue from the higher price segment equal the price to the lower price segment. Okay, your willingness to pay. You give a close attention to this keyword, willingness to pay. Means it's referred to the income generation. Okay, so how much my buying power is. Okay, I am able to buy or not the product if they place that amount of price. So normally that is the reason why we are doing segmentation. Segmentation is not simply just break the group. Okay, break the group with certain condition. Okay, so one of the main condition will be the buying power. Okay, pricing and revenue management for perishable asset. Any asset that loses value over time is perishable. Okay, so two basic approach to deal with perishable asset. Vary price dynamically over time to maximize expected revenue. So we call it as a dynamic pricing. And overbook sales of the assets to account for cancellation. So these are the two basic approach to deal with perishable asset in terms of pricing and revenue. So when talk about dynamic pricing, so its effective differential pricing generally increases the level of product availability for the consumer willing to pay full price and total profit for the retailer. So these are the demand for the period with given formula. Okay. So as usual, plug in all the information. Okay. So effective differential pricing generally increases the level of product availability for the consumer willing to pay full price and total profit for the retailer. So actually consumer, they just concerned on the price. Profit element is on the supply chain players among them. So consumer not interested with the profit. Actually but actually what they are doing is the buying, by paying the price of the product, they're paying for everything, all the costs that spent by the supply chain players. Okay, so here we simple calculation. Okay, so you plug in the values, everything, then you can see that C should be less or more than equal to 400. So it's more or equal to 0. Okay, so here, so using Excel as a tool to calculate the total profit. So without using all the formula, so just follow the cell formula here, exactly follow to get the value for your profit. Okay, total profit here. Okay, again, I just want to focus the previous slide. you see quantity at beginning of season is 400. You're moving with 400, and the price is, you can see, different price. Okay, different value of price for each product, and here with similar same price. That's why I went back to the previous slide to show you. Okay, earlier I never mentioned that the differential pricing. So here they using the same pricing method. So look at the profit level here when using the same pricing method, and look at here when using differential pricing method. So it's proven that when we use a differential pricing method uh, uh, to different group segment, so we gain more. Okay, so evaluating quantity with dynamic price. Okay, all this, don't confuse with the numbers. Okay, when you go through the books, when you do the exercise, I think you will understand better. Okay, and this is simple mathematical calculation. I assume that student won't be have any problem to do the calculation. Yeah, if you don't understand, please you can ask me anytime. Okay, again, yeah, you see it's cost per unit. They put the cost here as 100 ringgit, and quantity at beginning season 245 with differential pricing method. Okay, so the total profit is as given in the screen. Okay, so the key point here, dynamic pricing can be a powerful tool to increase profit if the customer sensitivity to price changes in the course of the season. This is often the case for fashion products, for which customers are less price sensitive early in the season but become more price sensitive towards the end of the season. Dynamic pricing should, however, carefully consider strategic behavior by customers who may anticipate future price drops and delay their purchase. With strategic customers, it may be better to have a fixed price or reduce the quantity offered. Okay, so here the key point here, you understand the customer, the behavior of customer, and behavior of each segment is will be added value when you want to put the differential pricing for each segment. Overbooking. Okay, basic trade-off is between having wasted capacity because of the excessive cancellation or having a shortage of capacity because of few cancellation requiring expensive backup. Okay, so it's all given mathematical formula here for you to do some calculation definitely. So cost of wasted capacity and cost of capacity shortage. So CW is capacity wasted, and CS is capacity shortage. Okay, so again plug in the value to get the overbooking values. So here the screen, the overbooking value is 1150 unit. Key point. Overbooking or overselling of a supply chain asset is a valuable tactic if order cancellation occur and the asset is perishable. The level of overbooking is based on the trade-off between the cost of wasting the asset if too many cancellations lead to unused asset, and the cost of arranging a backup if too few cancellation lead to committed order being larger than the available capacity. So pricing and revenue management for seasonal demand. Okay, seasonal peaks of demand common in many supply chain. Okay, even in it's normal. Okay, off-peak discounting can shift demand from peak to non-peak periods, charge higher price during peak periods, and And a lower price during off-peak periods as normal practice in anywhere throughout the world. People are doing that. This in Malaysia also we are doing so many times. You also will see in during festive season there will be a different pricing. Off festive season the price will be different. You see, so it's normal. So we're going to look into this element. Okay, increases profit for the owner of asset, decreases the price paid by the fraction of customers, and brings in new customer during the off-peak discount period. Okay, so how you manage your pricing and your revenue during the seasonal demand. Okay, so pricing and revenue management for bulk and spot contracts. Problem constructing a portfolio of long-term bulk contracts and short-term spot market contracts. Okay. Decide what fraction of the asset to sell in bulk and what fraction of the asset to save for the spot market. The amount reserved for the spot market should be such that the expected marginal revenue from the spot market equals the current revenue from a bulk sales. So again, mathematical formula. So So you see bulk contract cost, spot market cost, CBACS. Okay, so you bulk in all the figures to get the value. So the value is 6.63. So all this value got meaning, So key point here, most consumer of production, warehousing and transportation assets in supply chain face the problem of constructing a portfolio of long-term bulk contracts and spot market purchasing. The basic decision is the size of the bulk contract. The fundamental trade-off is between wasting a portion of low-cost bulk contract and paying more for the asset on the spot market. Using pricing and revenue management in practice. Okay. So first you need to evaluate your market carefully. That's why I said when you want to differentiate the segment, you have to thoroughly know the behavior of the segment. Okay. Second, quantify the benefit of the revenue management. Yes, numbers is the promising values. So you have to quantify the benefit of revenue management. Implement a forecasting process. Keep it simple, involve both sales and operation, understand and inform the customer, integrate supply planning with revenue management. So we already end of this chapter. So I assume and I believe that student able to understand the role of revenue management in supply chain, identify the condition under which revenue management tactics can be effective, describe trade-offs that must be considered when making revenue management decision. Okay, so very short and simple topic, and I assume that and I believe, not only assuming, I'm believing that you all will do the exercise that provided in Calip platform. Please do the exercise to have more understanding on this chapter. Any queries, any question, don't hesitate to ask me. Stay at home, be safe, take care. Thank you.